Hi, welcome to my YouTube channel where I provide profitable crypto information to help you make the most money in cryptocurrency investment. If this is your first time you are visiting my channel, make sure you click the subscribe button and like my videos. Hit the bell for notifications for more content. Cryptocurrency investments comes with a lot of reward financially, and also to anything that has reward also comes with its own risk. And to avoid those risks, that's the reason why I am doing this video, to inform you and also educate you about how cryptocurrencies work. Today, we'll be looking at the 5 worst cryptocurrency investing mistakes to avoid for 2022. But before we start, here is a disclaimer that trading in cryptocurrencies poses considerable risk due to price volatility. I am not a financial advisor. Everything I say here is all my opinion, and also to help to guide you for educational purposes and so also for entertainment. If you need financial advice, kindly consult your financial advisor who is in the right position to guide you on your financial decisions. But after that, you can come for recommendations when you visit my Patreon group, cryptoshady.com. A lot of people come into cryptocurrencies market only when the news is everywhere on CNN, on CNBC, on the street. People are making money from cryptocurrencies. Then that is when everybody hears about it. Then they jump to the market with little or no experience, little or no research, and jump in. And at that time, the market has already gone high. And when because they have no experience, they jump in and buy at the top. And when they buy at the top, at the end of the day, because it has started moving already, and those who have already started, who bought when the market was low, have already started preparing to sell. That is when they start to sell off, and the newcomers who are buying will be holding bags. For example, if you look at this graph, from this stage where it has been consolidating, there's no news, no hype, and nobody is hearing about anything. But the great investors or smart investors are already accumulating. Bitcoin was $750 as at 2017, even 2016 December. But people started hearing about Bitcoin when Bitcoin got to about 1,700, 1,800 as at 2017 January, before it pumped to $20,000 2017. And at that time, that is when people started hearing and started feeling that this is the best way to make money. But imagine buying from here, or so even from here. Of course, there's a little retracement here, but it takes off. And when it takes off, this is the area where the news started going around town. Most people started hearing about cryptocurrency investment. People start hearing that people are making money from crypto, and they jump in and they start buying. And when they start buying, they buy it from somewhere here up until here. And because they are just buying and not with little or no experience, those who bought from here are already preparing to start selling from this stage. You can see here there's red already showing that people are already selling after these 2 pumps. People already started planning to sell from this stage. But maybe the market is still pumping, more people are still coming in, and it's still going up, and it gets to this place. For a coin like Solana, we're using Solana as our example, then it gets to 215.99, then it started dropping. And when it's dropping and dropping, then because the people who bought from somewhere here started seeing their money reducing, then they panic and say, Kai, our money is reducing. What next? What do we do next? Is to panic sell. And they start panic selling. As they're selling and selling and selling, they sell at a loss. And at the end of the day, they make no single gain. And by the time the market goes up, the next thing you see, it reverses again. Then it starts going up again. You can start seeing the market start going up, consolidating, and it starts going up again. Up to this point where newcomers start coming in again and say, oh, the market is reversing though. Don't forget, they sold at a loss here. And now, because they saw, oh, the market is coming back, they come back and buy here again. And when they start buying at this $218 per Solana coin, the market starts dropping again and they start selling again. So they continue ups and down, and that's not the best way to invest in cryptocurrency. Number 2, fear and greed. A lot of people have we all have that emotional part of us that gets hold of us at any point in time. Fear. When we're making so much money, we're greedy. When we're losing so much money, with fear. But the market is not designed like that way. Warren Buffett, with his analogy that said, be greedy when everybody is fearful, and be fearful when everybody is greedy. There is a website where you can always check the fear and greed index measured for crypto. This is for 4th of January 2022. You can see the graph here is like a speedometer. At this point, we are having, as today, the market is a bit red and we're having extreme fear. This is the best part where you should be buying because the market is not going anywhere. This is a almost $3 trillion market. No government in the world can open its eyes and try to see how they can shut down where the citizens are investing. So at this point, this is the best place to start investing. But a lot of people who are inexperienced or who don't understand investment this is where they sell rather. But when it gets to somewhere here, maybe in the green part, which is the extreme greed section, that is when they start wanting to buy more. But that is when the smart investors are already selling. So do not follow this rule. Avoid this. Always buy from this part of extreme fear and sell at the extreme green. But that's why extreme greed, that's why it's even green. They say where there's blood on the street, there's always flesh to pick. Crypto Shady is our website for where you can subscribe and get all alerts for crypto. You don't have to do all your research by yourself. Nobody can pick all the coins in the market and pick the right coins. But we as a team, we get all the information everywhere, do our research, and recommend these coins to our subscribers. We have different packages where you can also subscribe monthly and get alerts where you can trade the right coins to make the maximum profit. So you can go to our website at patreon.com/cryptoshady to register and get alerts and trade with. Number 3, dollar cost averaging, the DCA, or diversification. In crypto investment, a lot of people come in and because nobody can time the top, nobody can time the bottom. So you can't say, oh, I want to wait until it gets to the barest minimum so I can buy, or when it gets to the maximum I can sell. Nobody can time it because nobody can determine the market. So what you can do, the best strategy in cryptocurrency investment is to dollar cost averaging. What does that mean? It means that you can keep buying a certain amount or of a coin every time, maybe daily, weekly, monthly, as the case may be. You can try to share, so maybe you have about, say, $1,000, share it into 4 places and say, okay, every week I'll be buying crypto worth $250 each of a particular coin. It could be Bitcoin, it could be Ethereum, it could be Binance, or whatever coin you decide to choose. But keep buying that specific amount every week, probably maybe on a Sunday. Every Sunday afternoon by 2 o'clock, buy $250 worth of the coin. Next Sunday again, $250 of the coin until you exhaust your $1,000 worth of investment. This is one of the best ways you can average down. I've done a quick math here. Let's assume, say maybe this is a Bitcoin, BTC, okay? And you bought BTC at maybe $149, as the case may be. Probably, or then later it went up. You say, oh, the price is going up. Oh, the price is going up. Oh, then you buy again at 247. At the end of the day, by the time you check the two prices and see the difference, you can see that by the time you add the 149 price and the 247 price and divide it by 2, your average price comes to 198. So you can see that your average price. But if you had bought at 247 and left it like that, for example, definitely you won't be able to wait until the price gets higher for you to make profit. But by the time it drops and you buy at 149, you can see that you have averaged down your entry price. So you can even sell at 200, which is lower than 247 and also to higher than 249. Number 4, buying based on cheap prices. A lot of people are fooled by the prices of a coin. For example, they take let's say XRP, Ripple, or maybe take Dogecoin, or maybe take any of the meme coins that's 0.000003 cent, for example, and say, oh, this price is cheap. Bitcoin is $3,000, and begin to buy it. There's a reason why gold is expensive, and there's a reason why salt, that is so useful to almost everybody's life, is so cheap. is the supply. The supply matters a lot. Whenever you are buying cryptocurrency, look at the supply. What is the supply quantity of the coin? Is the coin in billions or in thousands or in 100 million units? Bitcoin is 21 million units in total. Currently, we're mining, I think they've mined about 18 million units so far. So Bitcoin that is about 21 million units in total, of course, cannot be compared to a quantity of maybe XRP that is in billions. So there's the amount of the price compared to the supply gives you the market capitalization. So if the market capitalization is more than a certain level, definitely it cannot carry it because the price has to remain low for it to be able to be sustainable. But if the supply is very few, then there are more demand for it, the price goes up. So it's just demand and supply mechanism that happens in the market. So do not look at the coin based on the price or say, oh, it's very, very cheap. The price is just $1. And you go ahead to buy rather than looking at the ones that are so expensive. There's a reason why they are expensive. If the very cheap ones are that good, why are they not expensive? So watch out for that also. Number 5, using leverage, which is futures trading. In this case, you borrow money from the exchange that you are trading in and add it to what you have. So let's say, for example, you have just $10, for example, to trade, and then you borrow extra maybe times 10 of the amount you are trying to use, pushing it from maybe, let's say $100, that's your fee or the capital that you have in trading, and you borrow extra times 10 of it, which is like 10x, which is the 10x leverage that you're using. So you're now using about 10 times 10, that's about that's 100, that's about $1,000. So with your $100, you are using about $1,000 to trade. So because you are using that $1,000 to trade, which is not your money is just $100, the risk is high, the reward is very high. So for example, maybe some people can just go to the leverage section and just, they want to do 20x of that amount or even 72x. Some can even go to 100x, which is very, 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 very risky. And with this, you can be liquidated in a short while. So if the market goes against you, because you can't time the market, you can't even know when the market will go up or down. Everybody just speculating to say, the market is going up now. So if you don't have the experience in trading this and you go in and it's you want to make all the money with your $100 and you are doing 10x, which is even small. Some people will just go to maybe 51x or 73x. That is 73 times the amount you currently have. So for every 1% increase of the coin, you are making extra 72 times the amount you would have made. And also don't forget the hindsight. If it drops by just 1% alone, you are already losing 72% of your current investment, which is maybe your $100, 72% is already $72 out of it. So you are left with about $28 left. So for every 2% drop in your in the market or of the coin, in the price of the coin, you'll be liquidated. And when you liquidated, it wipes your money 100% to zero compared to where you traded it in spot market. Spot market is just the price that is just changing. The quantity that you have still remains the same. So in a nutshell, learn not to make these mistakes. Do your research, search for information on the internet, and also by the time you have your knowledge and you need a place where you can get information or alerts on what to buy, when to buy, and how to sell, visit our Patreon channel, patreon.com/cryptoshady. Subscribe to our Patreon group and you'll be happy you did. Finally, if the content that I provide here makes you happy, please do not forget to subscribe to our channel, click the likes, hit the bell for notifications for more content. Thank you and see you later.